Welcome to the show. Today I have Amir Javadi from Sherman Oaks Exclusive. Amir, thank you for being on the show.
Thank you for having me here.
Well, we've had a good history, first of a friendship and then doing a business together on the commercial side.
Yeah.
Our first deal was a property out near Koreatown.
That's right.
Which you found online and you let me know this is a unique one.
Yep.
It was a composition of about 30 properties that the broker was selling it from a family of a death in a family.
Yep.
Unique situation.
Yep.
The property was related to your industry. It was body shop, mechanic, but didn't have a phase one, didn't have a phase two. And we were just drawn what's going to happen. It's going to have issues. Is it clean, the environmental or not? Tell me more about how that deal went through.
So at the time, I was selling a condo and I needed to do a 1031. And coming out of COVID, residential was going over asking by a lot. Some homes I saw going for $500 over asking price. So I thought, why don't I, take the road the path that less traveled, which at the time was commercial. And randomly in my email box, I got this listing, which by the way was listed way higher than what I ended up getting it for, thanks to you. It was like $3.5 million, and it was, a junk property. It had a lot of deferred maintenance, a lot of work that needed to be done. The leases were expired, and so pretty much you made the offer, we made a lowball offer, and they accepted it, and we went in there and changed things up a little bit. And after that deal, I much more prefer to do commercial deals than residential deals. Commercial deals don't require you to do that much maintenance. I get it, like if you have an office building or whatever, there's plumbing and so on and so forth, electrical. But on those type uses, which are automotive uses, is usually concrete block, and so the maintenance isn't that much. Anyways, you're doing a triple net lease, so that's the other advantage. When you're doing commercial, you have a triple net lease, so your tenant is picking up your taxes. Whereas if you buy a home and you lease it, you're covering the taxes, and the rent might not necessarily be enough to cover you. And so I feel like that's how a lot of people end up losing their income properties when they do residential, because they get hung up on the taxes.
So that property was like a road opener to, for you to start investing in that commercial property and other properties.
Yeah.
Which makes sense, and the numbers fall. Well, not all deals will fall into that space for how, depending on the price that we got, how we dealt with that agent, and property location. But we did have the importance of getting the phase one, and it also required a phase two. Thank God it's taking back clean, which allowed us to proceed.
Yeah. In that case, first of all, there was a lot of moving parts, which you helped me along in. I owe you that gratitude for that. Yeah. The phase, I think one of the factors, if I learned anything from that deal, is that I think in our offer we put a contingency that said that the seller would pay a portion of the phase one or phase two, which they declined, and the ball was in our court at that point whether or not we wanted to put the money out, because phase one, phase two is expensive, and if it's dirty, you're not going to get the property, and so you just lost that money.
Exactly.
Right. But I think if the seller was smarter, he would have done his own phase one, phase two. He's going to make the money back anyway, but at least then he could have been more confident in his asking price, and in that case, we got to take advantage of him not having that knowledge. Right. It was a question mark for him. We found they were hoping that we would fall out of escrow, so that they could raise the price and use our phase one, phase two to
after we paid for it, and they got a copy of it.
Right. So that was integral to doing the deal. Also, another great thing was that there was tenants in place long term. Even though their leases were expired, they weren't going to really go anywhere. So we were able to increase the rents to market and do some remodeling and fix it up. It was both beneficial to the tenants and for us. And so, I'm really happy with that place. And I'm trying to do a few more with you. We just haven't found the right deal
We're still
yet.
looking. Absolutely.
Which brings me to the next point, which is all these commercial properties that are coming up on the adjustable from before the pandemic.
Correct. So yeah, there are over $1 billion of commercial properties in all different sectors that are coming due. They're going to have balloon payments. Some will have a hard time refinancing. They're going to put a lot of money out of pocket to bring those principal balances down. Others might not even pencil, depending if they are in the office sector or in other sectors where the principal is, has a very big portfolio, a lot of loan balances, and they don't have enough liquidity. So hopefully we should be seeing a lot of those deals, but there are also on the flip side a lot of big hedge funds that are picking up those deals before it hits the market.
Right. I was thinking it's possible that we'll have a commercial bailout this time. 2008 was like a residential bailout.
Correct. There's always those possibilities depending what happens and what they do with the interest rates, what happens with prime rate, and also how flexible the banks are going to become with lending. They have tightened up quite a bit from the COVID days, but they are still lending. They have more than enough cash. It's not in 2008 where they don't have enough cash on their balance sheets. They have more than enough. They made enough money from all the different revenue streams. And, the last year you've seen all the chases. The bigger banks broke records on the profits.
Wow. Yeah.
So the lending is there. Now, which property is going to come out and who's going to have a trouble? I think we're going to have to see when it happens. We are going to an election year. So, they want everybody to be happy, and they're going to try to save them and not let people get unhappy so the votes go to the other side.
You also don't know about any black swan events. Clearly, the last election, we had COVID. And so who knows what might come up. Yeah, what might happen to, sway the election one way or another, or have another black swan event like COVID happen where we have to traverse the terrain and kind of pivot around the situation. But I feel like with commercial real estate, if you just stay the course, I mean, it's kind of sad what's happening to office buildings. I hear, how's the lending with office buildings? I guess I was asked.
Very stringent. A lot of the major banks have pulled out. You have to go to maybe some local banks, but the office buildings where investment properties are where it's hit the hardest because you have a lot of vacancy factor. But the unique part is I am doing a lot of office building purchases for owner user SBA.
Okay.
So those are very hot right now.
I see.
Interestingly. It's in that same sector, but it's an owner occupied via the SBA loans, the 10% downs, can go up, over 10, 20 million purchase prices.
Wow. Yeah. So, I mean, other than office building.
Correct.
I feel like commercial is the way to go because, residential is a no-brainer. You see it on Instagram all the time too. People are always, there's all these, personalities on Instagram telling you, hey, you should buy a rental property, you should buy a rental property. And when people say rental property, they automatically think, oh, you should buy a house or a condo and rent it out and make a cash flow or whatever. I think that, people don't think about commercial property too much or doing commercial investments too much because it's a no-brainer. For everyone knows it. You buy a house and then you rent it out. They don't think about different uses. Like a lot of people don't want to touch my use because they don't know about cars and they don't know about lifts and the structure, the way it's built, or that you have to do the soil test and all these things. So it takes the competition out a little bit. It makes it a little bit easier on me. But I'm sure there's other uses like, for example, a one-to-one, I think, comparison in that respect would be a residential home, a single-family residence to a strip mall. Everyone knows if you buy a strip mall, you're probably going to make money because you got a 7-Eleven there, you've got like a checks cashing in there, whatever.
Right.
So you're going to make money. And so for those, the cap rates are so low because any idiot is going to know that if I just put my money there, I'm going to get money back, right? But, and also, repairs are low. You buy a house or you buy a condo and you rent it out. You have to fix the toilet for the tenant. There's a roof leak. You got to fix it. I think in commercial you have to fix a roof too. But
depending what's stated in the lease agreement.
Yeah, and also evictions are easier on commercial property. And now that we're in California and they have all these laws, it's much easier to evict someone out of a commercial property than it is out of a residential property. You get squatters and this and that. With the commercial property, you file the eviction. And then the sheriff comes and locks them out. So right. It's my go-to. I used to only do residential, but now it's only commercial.
Correct. You run a family business where you're father had and bought the place where you guys have your first location out of, so you kind of an experience on it, but it was an owner user, not really focused too much on the investment.
Right.
So
yeah.
you kind of had that background.
Correct. So that's another thing. I looked around at my own building, and I was having a conversation at the end of the year, and I said, okay, how much did we really spend on maintenance in this store? You know, yeah, there's things that we fixed, like, you know, rubber hoses for the airlines, or I don't know, a water leak here or there, but nothing really that I didn't need to call someone to come out and fix anything. I didn't really have to paint the place and do any major work. Really, the maintenance was very, very minimal. But, you know, if you go, again, to single family residence, when the tenant moves out, now you got to change a carpet, you got to paint the place, you need to change the appliances maybe. That's a whole other thing. There's no appliances in my business, so I don't have to pay for that or change that or anything like that. Most of the cost, the main thing about it is that the cost is passed on to the tenant. So you're able to, when you do your cap rate, it's very cut and dry. It's like, this much rent is coming in, this is my payment, this is my tax, this is my insurance, this is what's left over, and what could possibly go wrong in a 4-wall concrete, you know, building. It's not much is needing to be done. Especially if you get in there and you rehab it, it's not that expensive. You can have a handyman do it, and then, you know, it's all profit at that point.
Right.
So,
but a lot of people have fear. A lot of, you know, going to the commercial. They're more comfortable going to residential because, you know, majority of the population would only talk about residential. Whenever you hear the word commercial, there's like a fright. There, people are like, "Oh no, what's dealt? How do I get in? What do I need to do?" Yep. But if they know what's available to them, you know, and that they can go into it, maybe you can have more exposure.
I agree. I think that's just from lack of knowledge. I think if they talk to a professional, maybe somebody like yourself, then they would gain that knowledge, or you would say, hey, well, you know, maybe I don't know everything about owning a commercial property. I can get you the loan, but I can put you in touch with A, B, and C person, and they can show you. It's really not that much difference than having a residential property, in my opinion. I think it's much easier as an owner, as an operator, to own a commercial property. People tell me, hey, I'm gonna buy an apartment building for 40 units. I get scared of that because I don't want to get the calls about the repairs need to be done in the middle of the night. You know what I mean? Plus, I have to pay the property tax on that, right? Correct. It's not a triple net lease. All of that has to be factored into your rents. If rents go down, now you might not be cash flow positive as much. You know, and that's another no-brainer thing, is that everyone says buy units, buy units, buy units. That's not so much my cup of tea. I think commercial property, it's, like I said, easier than residential, less maintenance, more hands-off. You know, that's my go-to.
All right. Well, yeah. Good. I'm glad you were able to make the switch and look for other properties together so we can find you the right ones that fit your criteria box and expand your portfolio to commercial space.
Totally. Yeah. You know, you might 1 month a washer and dryer breaks, and now you have to spend $2,000. You're going to have to take that out of your income for the rest of the year. I also don't understand, maybe you can explain this to me, all the investors that bought, you know, 3 caps and 2 caps and 4 caps when inflation's like 4%. How do they make money? I don't understand that concept. I also don't understand. I mean, I'm hearing from conversations that I have where people are now having to refi on a property that they had that was like a 3 cap or a 4 cap and getting a rate that's like much higher. Now they're going to be upside down, and how they didn't plan for that, I don't know. Like, I'm much more conservative when it comes to that.
Correct. So there's a lot of different ways to look at that, you know, 2 cap in the like prime cities and so forth. One reason can be like a gentleman or the investor owns all the property on that street or a couple of streets, and they don't own just that one. So for them, so it makes sense to pick up that one. Now they have full control of that whole street. Another reason what might be foreign nationals who come in and they don't care, just parking money for the long term, but they want to be in that prime area, prime development area. In terms of, you know, the people who are going to refinance, where they got the 3 or 4% variable rates on their 2 or 3 caps, now today you're like 6.5, 7, or what it might be. Yeah, they're upside down. They won't be able to refinance unless they inject money and bring down the principal.
I see. Yeah, so they're kind of, the whole point of whatever money they put down that was minimal at the beginning,
correct,
it's kind of like, it gave them a small period of time where they got to enjoy that, and now they have to come in with the rest.
They have to come in with the rest, and they're still not making money. It's basically their parking money.
Right.
Especially right now in those circumstances, you know, when you have a federal bond at the 5.5, and you have CDs around the 5, they're like, why am I injecting more money to this property where I can just put it in the bank and it makes more sense?
Yeah.
But at that time, if they're going to sell it, they're going to lose money on it. So it's kind of like a catch-22. What do I do?
Yeah. Some people might do that too because they want to get around Uncle Sam.
Correct. There's depreciation expense. And, you know, the major players that have a lot of properties, they use the depreciation
I see.
to avoid paying more taxes.
That's awesome.
And to avoid the capital gains taxes, they do the 1031 exchange.
Right. Like we did.
Correct. Exactly.
Yeah, very good.
Yeah. Thank you, Amir. Thank you for being on the show.
Awesome.
And
Thank you for having me. Appreciate it.
no worries.
All right.
Okay. Thank you for watching. If you enjoyed this episode, please give us a thumbs up, subscribe, share any questions or comments in the comments below, and follow us on social media. I look forward to seeing you next time.